Tariffs are squeezing margins, so CFOs are scrambling. They can't control Washington's next move, but they can control one of the largest expense lines, real estate. Hi, I'm Andrew Zizas, and this is To the Point. I have the pleasure of serving as publisher of CFO Intelligence magazine and chief strategist and CEO at Real Estate Strategies Corporation. In doing so, I get to advise CFOs across North America on numerous business, real estate, and career topics. At the end of today's episode, stick around. I have two special offers I'd like to make to you. Many executives miss this topic. Facilities can too easily bleed cash through occupancy costs, outdated and inflexible lease terms, and underutilization of space. When revenue softens, these fixed costs can become real anchors. What's the smart play? Audit every line item in occupancy expenses. Renegotiate service contracts. Renegotiate facility leases, even in mid-term, long before leases expire, to achieve more favorable terms. Challenge property tax assessments. Consider monetizing owned properties through sale-leasebacks to unlock capital. Sale-leaseback transactions can close quickly, converting illiquid assets into immediate liquidity, but timing of a sale-leaseback is crucial. Sale-leasebacks should be effected when a company is at the top of its game, not at the bottom. Why would you go to a bank when your company is not doing well and expect to get good financial terms? The same is true about sale-leasebacks, which aren't transactions, real estate transactions at the end of the day. They're financial transactions. They're credit transactions. They're more about the credit worthiness of the tenant perceived by the investor and the tenant's ability to make regular and continuous payments over the term of the lease. So the timing of a sale-leaseback is crucial. Other alternatives, if your company owns or leases surplus or obsolete space, consider consolidating operations and capitalizing on greater efficiencies. If your company's locked into unfavorable leases, if they don't contain beneficial rights like termination clauses, early termination clauses, expansion, contraction, or other flexibilities, then renegotiate them, restructure them, or terminate them. This isn't a real estate strategy. It's not about real estate transactions. It's about survival strategy and redeploying real estate as a strategic asset and doing so intelligently and maintaining financial stability and the optimal ability to drive growth. While competitors wait for tariff relief that may never come, proactive executives can extract millions from their company's existing real estate footprints. The question isn't whether tariffs will ease. It's whether CFOs will act before the next earnings call. In many cases, real estate may be one of those assets or liabilities, depending upon how you look at it, that holds the answer. Maybe just one of them, but maybe a significant one. If you have different perspectives on today's topic, or if you'd like to share case studies on how you redeployed real estate successfully to drive growth, contact me at andrew.zizas@cfointel.com. Now, at the beginning of this episode, I mentioned that I'd tell you about two offers. Well, I actually have three. First, we get very excited when experienced, innovative CFOs share their insights with us. So if you'd like to join me in an on-camera discussion, visit cfoiq.com and drop me a line. Second, in the alternative, if you prefer to share your perspectives in print, perhaps we can publish a story on your ideas and promote you and your company at the same time in CFO Intelligence magazine. If you'd like to explore a magazine story, visit cfointel.com, go to the publications page, and get in touch with me. CFO IQ on-camera discussions and CFO Intelligence magazine stories are available at no cost to CFOs, no cost to you or your company. Now, third, in keeping with today's discussion, if you'd like to understand in a 15-minute conversation how your company can secure free rent, annual rent reductions, no-cost renovation allowances, expansion, contraction, or early termination rights, and generally achieve more favorable terms in the facility leases that it occupies anywhere in North America, even if those leases are mid-term and won't expire for years, visit realstrat.com and drop me a line. Let's chat. We've been renegotiating and restructuring leases for decades. For any of the above, you can simply reach me at andrew.zezas@realstrat.com. Thanks so much for joining me today. I'm Andrew Zezas, and this has been To the Point.